Stock Talk. This is your host, Scott. Hope you had a good day in the market Friday, Thursday as well. But just want to check in with you this weekend. Hope you had a good weekend as well. Tonight we're going to talk a little bit about the P&E of stocks and how the market, you can look at that and tell, whether the market's getting expensive or it's, in a non-expensive state. So something that you'll hear a lot about if you watch any of these stock shows, P&E. We're going to take a look at some of the stocks in our portfolio. We're going to look at a couple of them's P&E. We're going to look at a couple of other stocks P&E and talk about that a little bit. Also just kind of look at our portfolio, see where we are. Did make some trades Friday. Wanted to talk about those and kind of get a game plan together for tomorrow when the market opens. So let's go ahead and take a look at our portfolio. Let's go ahead and jump over there and take a look at that real quick. So our portfolio, Friday we had a good day in the market. It was up 704 points. Awesome day. Green across the board, as you can see here, almost 3% in the Dow. So we got our DIA, which we're not holding any of that anymore, but it was up 3%. Not holding any SPY anymore, up 2%. Our Bitcoin was down a little bit. The only red one we had. QQQ, we are still holding some QQQ. We are in the green on that in one account and still holding on to that one. VTI still down a little bit on that one. Still holding that one. X, we're cost averaging on that one. Novavax had a good day, a really good day. Let's take a look at that one. Novavax has been on a tear. So you can see what kind of day it had here. I was still holding some of this Novavax in one of my IRAs, and when it got up to 1850, I did sell some of that on Friday, and then it continued to go up, and when it hit $19, I sold the rest of it. So I am out of Novavax on both IRAs now, and it's been a really good year for me on that one. I still have a few in my cash account. Won't be selling those because don't want to fool with taxes and things like that. So we'll just hold on those for a long time. We'll be back in this one too. This has been a good one over the years since I've been trading this one since 2016. So we'll be looking for an opportunity to get back into this one. Good luck to anybody that has it and it's been in there for a while. It's a roller coaster for sure at times, but I still think there's a lot of potential with that one. I'm just selling out because I'm retired. I want that money on the sideline, and we'll kind of ease back into it because that was one of my larger holdings this year. And so happy to take the money. I'm not a hog. I'm a pig, so don't forget that. That's always my strategy, take that money. All right, so that's been a good one, and it's probably going to continue to be a good one. The volume was about normal, so nothing crazy going on there, but it was a good day for anybody that's been holding that one a while. All right, so let's go back to the portfolio. Again, Novavax, hang on to it if you want to, but I'm going to have to get out for right now. MPC had a good day, really good day, up almost 16% in a day. That was awesome. Matter of fact, I think, that's our big winner for the day. Of course, we know that's got a long way to go to get back to where it needs to be. EXAS, another decent day for EXAS, now up to 74, getting on up to that pre-drop price almost. We're not far from it. Cliff up 5%, ACB up another 3%. Again, that one's going to do a reverse split of 12-1. Don't forget about that. And we're keeping our eye on that. So once it does that, we'll see what we want to do at some point later. But we're not going to fool with it right now. Okay? All right. So, again, what I wanted to do next is kind of talk to you about price to earnings ratio, P&E. You'll hear it all the time. And you'll hear people talking about, they'll say, this market's expensive. This market's expensive. You'll hear that term. They'll say that. What they mean by that is that P&E ratio, that forward-looking P&E ratio, is higher than an average. Okay, so we're going to look at what the averages are, what we're currently rated at, and then we're going to take a look at a few stocks just to kind of get an idea of how that looks on one of our stocks and some other stocks as well. So let's go ahead and jump into that. Let me get us over to there. We'll start talking about that. So price to earnings ratio, ration. The price to earnings ratio, also known as the P&E ratio, the PE, or the PER. It's the ratio of a company's share, their stock price, to the company's earnings per share. Okay? It's comparing the company's stock price to the company's earnings per share. All right? The ratio is used for valuing companies and to find out whether they are overvalued or undervalued. Okay? And what you'll see sometimes on some of these stocks, they won't have a P and E because they don't have an E. Okay? They don't have any earnings. So that's what it is. So what is a good P and E? What's a good one? What's a good one to look for? Let's take a look. What's a good one? Common sense investing using the P and E ratio. A P and E ratio of 40 is really high. A P and E ratio of 7 is really low. And a ratio of 14 represents the average over modern history. So that's your average over history is a 14% P and E. Okay. So you can take this information, you can look up the current PE ratio of a stock market and figure out where things are relative to historical times. So with that question in mind, we want to take a look. Where is the Dow right now? Where is the Dow? Now the Dow's got its own P and E. The S&P's going to have its own P and E. And so, but I kind of focus on the Dow all the time. And so on 4/2, this is the latest date I could find. It's only a couple of weeks ago. The estimated P and E for the Dow is 16.7. Now, I do remember somewhere before the fall, we were running, when that market was at its high, we were running in the 20s, 21, 22, something like that. And that's kind of a high. Whenever you see this thing get into the 20s, you're kind of getting into a high range there. Okay, so that's what you'll hear them say that. You'll hear them say this market's expensive, or this is a undervalued market. You'll hear that sometimes when the P&E has dropped below a certain point. And we would have been there probably a few weeks ago, but actually, I don't know that we've got down to 14, which is that was that average we were talking about a while ago. So I think we got down to at least 16 something. Well, we are at 16.7 now, 6.7 now. So we probably did get down to the 14, but I don't think we got much below that. So what does that look like with our stocks? Let's take a look at one of our stocks that does have a P and E. Let's see here. I think just kind of give you an idea here. Look at U.S. Steel. U.S. Steel does not have a P and E. Okay, all right. So they're not earning money. They're not earning that. They're not earning anything per share really. Earnings per share right here is a negative $3 and something. All right. So let's go back to here. Let's take a look at our MPC. Now MPC we know has been beaten down. It was running around $55 a share at one point. So let's take a look at it. All right, so earnings per share for MPC is $3.97. So for every share, they earn $3.97. Their PE ratio is currently 6.41. Now remember what that average was. That average was 14, right? So 14, you could look at that and say, that's kind of got a low P and E. That's kind of undervalued. And I'd say that would be a good statement right now for MPC. It's undervalued. It's probably lower than it needs to be. It should be. That's a low share price, so that's probably a good valued stock to buy right now, based off of its current P and E. Okay, now can have a P and E because it's not expecting a whole lot of growth. So what's some other ones we can look at? Let's think about. I was looking at a couple earlier. Let's look at Apple. Apple's a common stock. Everybody knows all about Apple. Most folks have an iPhone or an Android. But let's look at the Apple. Apple Earnings per share, $12.60. That's pretty good earnings per share. So their PE ratio, $22.45. Okay, so their PE is kind of high, but look at the earnings per share is not. It's pretty high as well. So, and their growth, you always look at the growth that's expected in the future, and there's a lot of expectation for growth for Apple, as there always is. So a 22.45 PE. Is that expensive? Is it undervalued? That's a tough call there. I know their share price was running much higher than this before the fall here. Let's see where they are. Just curious, real quick. See where they are. Yeah, they're getting back up there. I mean, they're probably pretty expensive in this area, but they are getting back to close to where they were. Another stock. Let's look at what's another good one? Amazon. Let's take a look at Amazon. All right, Amazon. You see their earnings per share is $23. Not too different than Apple, but their PE ratio is 103. Okay, 103.22. So just by looking at that, there's a couple of different things here. They're either overvalued, okay, or there's great expectation for their growth, okay. And I would probably go with the latter there. There's a whole lot of expectation for their growth. Just curious. Let's take a look at one more. Tesla, TSLA. So let's look at Tesla. Tesla PE. Now they're showing no earnings there because they're still in the negative territory on their earnings. Okay, but so you can see there it does kind of give you an idea of whether a stock is expensive or not, whether it's undervalued, overvalued. So that's just what I don't pay a whole lot of attention to that per stock as much as I do the market, because day to day I don't really think it has a whole lot to do. And if you're trading short term, you're just kind of watching those charts. At least I am. I'm kind of watching those charts for levels to get in, levels to get out, and I'm not paying a whole lot of attention to a PE ratio. Okay. But the market, if it, when it's getting expensive, when it's up there in the 20, 22, 23, 24 range, you can bet that is an expensive market across the board, okay? And so what I start thinking about is, all right, that's an expensive market. There's got to be a pullback coming at some point when it's that high. But, sometimes those pullbacks don't come. I was expecting one the last couple of weeks and haven't really gotten one. So you can't always tell. This market has a mind of its own sometimes. But those are the things I look for in the market as far as being expensive and things like that. And you'll hear it. They'll be talking about it. They'll talk about how expensive the market is. And sometimes they talk about how expensive the market is for months and even years. So you can't always pay attention to that, but it's something to keep in mind. One more thing that you can use to help you make decisions on how to trade and when to trade. Okay, so let's go ahead and get over there to our after hours and take a look at what's going on there. Okay, hang on just a minute. So there's where we were Friday, up 704 points. Again, S&P green at 75, and the NASDAQ was also green. Let's take a look at Asia. Okay, the Nikkei is not open yet. It looks like Shanghai and Hong Kong are going to be up a little bit. Nothing major going on there. Let's see here. Oil. Let's see what's going on with oil. Oil's in the red a little bit there, 4%. So it was a bad week for oil last week, so we may have another bad week this week. And let's look at our pre-market. Our pre-market looks like we're red across the board, so we may start out on the downside in the morning. So we'll just wait and see. Looks like they're very close to a deal on the second round of small business loans. Hopefully they'll get that handled tomorrow. and maybe that'll turn the market around. I know they kind of ran out of money on those business loans, and that'd be a big deal if they can get that passed tomorrow, I would think, for the market. So, but this market's been doing pretty good. It's been making a pretty good comeback. I'm thinking, I was thinking there's going to be a pullback, but I think the market's just kind of overlooking the virus stuff now, and it's more about just earnings and the direction of getting this back, getting everybody back online. I think that's what the market's paying more attention to. Now, you can bet if we start getting back online and we start having things go up as far as the virus goes, there will be a lot of attention paid to it again, and so we'll just have to keep an eye on that. I've got a good bit of cash on the sidelines, so I'm in good shape as far as being ready for anything that comes as far as a pullback goes. If we have another 10% pullback or something like that, that would be something where I'd be going in with some of that cash. Probably going to be trading some things, and maybe we'll talk about that on our next video about some that I'm going to be taking a look at. I definitely will let you know any trades I make in the future. I've been having my eye on one Sirius Satellite Radio. That's one I've traded before. Ticker's SIRI. We'll take a look at that maybe sometime, but I'll be watching that one. It's down in the $5 range, and it had been around 7 before this drop in the market. But it's earnings season again. I'm usually not in a hurry to buy stuff that hadn't had their earnings yet, and just kind of like to stay out of the way on that. And then once they have their earnings, maybe then I'll jump in on something. Unfortunately, a lot of times what happens is the good news comes out, they jump up, and then it's out of the buying range. So it's hard to do. But I just learned over the years not to be in one when the earnings is coming up, if you can avoid it. Now, if you're already in it, that's the way it goes. But if you can avoid it, more times than not, that I've seen with my stocks, it's been always you better off not being in it while it's going on. So we'll see. We're going to watch it, and we'll be careful about what we're buying. But we're going to be looking for opportunities anytime that market drops. We've got those two. We've got those two ETFs that we're not in. The one for the Dow DIA and the S&P SPY. So those two I'd like to get back in if the market has a big down day. If we have a big up day, we'll try to get out of that QQQ and the VTI. So that's kind of what we're going to be doing. All right. Well, all right. You guys have a great day tomorrow. Stay safe out there. Even though this thing's getting turned back up, be careful how we do it. And we'll try to get back on here Tuesday night sometime and talk to you again. All right. Thanks again. Have a great day. Bye. To subscribe, click the button in the right-hand corner. Thank you.